I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD.
The USDA's March WASDE report came in about as expected after the agency left the U.S. crop balance sheets largely unchanged this month. Corn ending stocks for the 2025-26 season were steady at 2.127 billion bushels. The current stocks-to-use ratio is sitting at about 13%, the highest since the 2019 and 20 season. The U.S. wheat balance sheet was left unchanged as well. Ending stocks were steady at 931 million bushels, up 9.4% year over year, and the largest since the 2019 and 20 season as well. Now, the soybean carryout was steady at 350 million bushels. However, the USDA did raise the soybean import forecast to reflect trade data. However, that was offset by an increase in domestic crush demand. More emphasis, though, was on the global balance sheet. The USDA raised its Brazilian corn production forecast by 1 million metric tons. Meanwhile, the agency cut the Argentinian corn forecast by 1 million metric tons to offset that. Additional increases in Brazil's beginning stocks and Ukraine's production forecasts lifted the global carryout by 3.8 million metric tons from the previous month. Now, minimal changes were made for the global wheat and soybean forecasts. More focus will be on the quarterly grain stocks and prospective planting report at the end of this month. Low cow slaughter and strong demand is expected to keep the floodgates open on U.S. beef imports this year. The USDA raised its U.S. beef import estimate for 2025 and its forecast for 2026 on Tuesday. Shipments are estimated to have hit a record 5.47 billion pounds last year, up about 20% from 2024. Tightening beef inventories are expected to attract additional shipments this year. The USDA forecasts imports to hit another record of 5.68 billion pounds, another increase of 4% from last year. Rising imports have helped keep total U.S. beef supplies relatively steady despite falling beef production. Total production is expected to be at a 9-year low in 2026. However, total shipments are expected to decline only slightly this year as imports largely offset lower production. As a result, the U.S. is expected to rely more heavily on imported beef to help fill the gap left by shrinking domestic production. China's soybean imports have been off to a slower start for the year. Preliminary customs data on Monday showed that China imported 5.98 million metric tons of soybeans in February. Total shipments for January and February reached 12.6 million metric tons, sitting nearly 8% below the same period last year, and that was also the slowest start to the calendar year since 2019. Slower progress in Brazil's soybean harvest was likely part of the reason for lower imports. About half of Brazil's soybean crop was harvested as of last week, but 10 percentage points behind last year's pace. U.S. cargoes were also en route to China yet, so imports are expected to improve in the March data release. China's soybean exports are expected to be a record yet for the current marketing year, driven by those record supplies from Brazil. U.S. soybean sales to China remain lackluster this season despite expectations of more sales to the country. Official data from the USDA shows that Chinese commitments of U.S. soybeans reached 10.8 million metric tons. It doesn't include sales to unknown destinations, but total commitments remain about 49% lower than a year ago. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.